it's all coming down to central bank action still, isn't it? And there are plenty that lie ahead for this first half of December. RBA, Bank of Canada next week, followed by the Fed. Joining us now, Peter McGuire from XM to discuss how these decisions may impact markets. Peter, good morning to you. Welcome to the program. Can I just start, before we get into some of that central bank action, your impressions there at XM about this jobs report on Friday, and if that changes anything about your expectations for the Fed this month?
Well, good morning, Nadine. 263 was a strong read for November, so that's a positive note, and we've just got to see how that all constructs over the next matter of days as far as rhetoric coming out of Fed, central bankers globally, and their appetite for increasing rates, or is it going to be a little bit of a slowdown and we're first cab off the rank tomorrow? So that'll be interesting. And I think it was a positive tone. We've just got to see if that Christmas rally that you alluded to earlier maintains. And over the last 70 years, we've normally seen a nice uptick as far as December being a strong month for US equity. So are we going to maintain that, or is there going to be a change?
Right. Okay. So when it comes to how central bankers are digesting the economic data that's out recently, particularly in the US, first off, I mean, this doesn't change the sort of thesis around higher for longer. Would you expect to see a 50 basis point hike as opposed to 75 basis point in December from the Fed?
Well, I think so, Nadine. I mean, the consensus is 50 is going to be the number. So I'm looking at, I play the game with that sort of consideration. That's been a very solid move to the downside as far as US dollar index. You're sitting there at about 104.50. So considering where we were only a matter of a couple of months back, we're at 114, 115. That's given up a lot of hot air. And so in turn, that's a good sign for the US economy and with a cheaper dollar. And then the other side, of course, is that the overall momentum with equity markets and where we move through to 23, I'm thinking 50's got to be the number.
Okay, we got 50. We've got 25 here tomorrow, you think, Peter?
Yeah. 75% probability of 25 basis points tomorrow, Nadine, and 25% with a zero read, and I'm going with 25 basis points. That's the market consensus, and I think, most people are tipping that sort of number.
Okay, so when you look at some of the key currencies there, US dollar, talk to us about the US dollar. We seem to have seen the worm turn there. Is that likely to be, how things go from here on in? Has King dollar hit its peak?
Well, I think so. It certainly hit its peak in the short run, and there may be a return to its move to the upside in the new year. But at the present time, Nadine, it's really been pushed lower. As I mentioned, 104.50. You've only got to look at some of these currencies. We've got a pound sitting at 1.22, nearly 1.23. It's only a couple of months ago, and we were sitting at 1.03 on that bleak Monday with Liz Truss. So there's a 20 pence move. You've got a yen sitting at 134. It's a 3-month high or 4-month high. Very, very strong there. And then you've got a euro sitting at 1.05, moving towards that 1.06. We were thinking of whether we're going to be at 0.96. So these currencies have been dynamic. And you've got an Aussie. It hasn't been the greatest trade, but still sitting at 67, nearly 68.
Yeah, the Aussie is a bit gloomy, you could say. Is that partly a reflection about the uncertainties about China's economy right now, even as we continue to get drip-fed, news of reopenings and easings of restrictions?
I think so, Nadine, absolutely. Yeah, that was a good sign, I think, over the last week, as you mentioned earlier, 16% move to the upside for iron ore. So that's a strong move. Copper prices are up. They've been bid up strongly. So the base metals are having a nice run, and maybe that mood may change and we might see a little bit further uptick as far as Aussie. I'm not saying you're going to see a 70 anytime soon, but maybe you're going to be 68.5 within the next week or so.
So we're watching the Aussie dollar. And oil through the overnight period. I mean, we did see OPEC Plus meet. What did they mean? I know this is your bag to a large degree. What do they mean? They're not making any changes in production targets, but they still need to take immediate action to ensure price stability. What is that?
Well, till the end of 23, and the notes coming out, until the end of 2023, you're going to see that continued reduce in production by 2 million barrels a day, or 2%. So we know that they produce around, the global consumption is around about 100 million barrels a day. So the next part of the journey, of course, is where does Russian crude play into all of this, being a massive exporter of crude and energy across the world, and the European Union saying they don't want to, they want a price cap on Russian crude, and how the Kremlin's going to interpret that. So Nadine, these are very wild geopolitical concerns that are going to impact Russian crude, and they've got the backing, I think, in a lot of ways of OPEC plus. So how this plays out over this European or the Northern Hemisphere winter is going to be crucial, and it could be a wild card as far as energy prices in the short term and what we see moving forward into January and February.
Okay. Oil is obviously really important for the Canadian dollar. We've got the Bank of Canada meeting this week. Look, they were one of the first to take their foot off the pedal in terms of the chunkiness of rate hikes, because they have said that they are seeing slowing in the economy. So will we still see a cautious Bank of Canada this week, do you think?
I think so, absolutely, Nadine. And they'll be just playing. They'll certainly look at what we do, and then they'll appreciate, their own internal economy and where they move forward with this. But yes, I think that they'll be. There's a sense that they need to be considerate with the slowing down of your native land and what's happening from a consumption standpoint and with energy prices the way they are. So yes, I think they've got to be very considerate of, or mindful of, the big picture and take on board what their southern neighbours are about to do in the next week or two.
All right, Peter, can I just get a technical view on the S&P 500 from you now? Because really sort of near pretty important territory in terms of the 200-day moving average, if I'm not mistaken.
Yeah, exactly. Well, I think there's further upside of it. I'm not going to go out there and say numbers, Nadine, but I think you've got further upside for those equities. If that can continue, then I think it's going to be a nice Christmas rally over the next week or two, leading up to mid-December, and there's probably another % or two to be put on in the short term. So I think a lot of traders are looking for that excitement and opportunity, and I think that will continue with a softening dollar and possibly a further push up as far as equities.
Got it. Peter McGuire, XM, always nice to speak with you. See you soon.
Thank you, Nadine.